Let me
And then
stop you
at
there
that,
because there's an
yeah,
important thing. Like if someone who doesn't know anything about the business, just briefly describe the difference between a depository institution, direct lender like a bank, and a cross
yeah,
country, which is like a correspondent lender. Because I've done all three also, but a lot of people
yeah.
don't understand the distinction.
Exactly. Yeah. So your depository lending, so in this case, PNC Bank, essentially they have their own set of rules. Obviously, they follow your guidelines from Freddie and Fannie, the big national corporations, but they make their own rules as well. And then they can lend their own money too. So, usually they leverage those assets from the bank and then they turn around and lend that to their clients. Then when you move over to a correspondent, so it's sort of like a midway between like a retail bank and then a broker because they're not really a bank. So they don't handle checking or savings accounts or anything like that, but they do lend that money to clients strictly for mortgages. And then, in terms they have an investor on the back end giving them that money to
Yeah,
lend it out. So
yeah. And so, like as I describe it to clients, the depository institution, because I worked for a bank also at one time, it's like they do everything from the application to the lending the money and oftentimes servicing it.
that's right.
Correspondent does everything
Yep,
up to servicing the loan. And the
exactly.
advantage of the correspondent is it's like almost like a broker where you can go shop rates. But
Exactly. Yep. Yep.
yeah,
Exactly. You had a few options for that.
yeah. And then
Yep.
as I explain it also is with the bank and the correspondent, and I was correspondent more than well, I was 14 years a correspondent lender.
Oh, wow.
Uh, the all those companies have overhead. There's a marketing
Yes.
department, there's a legal department, there's the processing, there's the
A
underwriting, and they
lot.
have to get paid those departments. So how
That
do
is
they get
correct.
paid? It's in the interest rate. So usually,
Correct.
even though they have the higher rates because they have to cover all those departments, a lot of people, especially when I was doing it, is like the advantage is the control of the process. Being
Right.
able to walk across the street
Exactly.
or
Yep.
across the hall and say, "Hey, underwriter A, B, C, D."
Exactly.
So
Yep.
when
Yep.
when your boss went to cross country, I'm going to guess from my banking experiences, and rightfully and understandably, banks have to be a little bit more conservative.
Yeah.
So I know my reason was I was tired of saying no to my friends who didn't have cookie cutter loans. What
Right.
was
Right.
what
Right.
was what was his and your reason? Was it
Yep.
somewhat similar?
Right on. So for him, it was mainly the fact that he really, he has a family, he has four kids, and he really wanted to make them a priority, right? So for with banks, you do have that banking hour. It's a little bit more strict. When you go to a correspondent, you can really run your own show, right? So he had like a P&L model, brought me over. So we formed like a little team. So we still were doing all these great loans, but at the same time, it was like a little hub. So it was a lot more flexibility for him and his family. He could like travel, but still be involved. So it was a huge thing for him. For me, it was the same. I was like, you know what? I like the flexibility. And I also want that next step because at one point, I want to do like my own thing, right? And maybe have my own team. And we knew that the day will come where we will go our separate ways. But we
Right,
worked together for 6, 7 years. So it happened at that point, but you're never like prepared for it, right?
right,
So, but I
right.
was like, yeah, I want to go and have my own team. And I knew that I wasn't gonna be able to do that at the bank. I had to really go to a correspondent, and I didn't really know about the broker world then yet.
Right.
So I was like, yeah, this just makes sense, for us for the move. Like we got the great experience. Let's apply that towards the correspondent side. And like you said, really open up that pool and help more people that way because loans are different nowadays, very
Yeah,
different.
yeah, absolutely. And correspondents do have more loan options. They're a little bit more
Yep,
flexible with the
it
with the
was.
yeah, with
Yeah.
FICO credit scores.
Exactly,
Um,
exactly. And that's what I was when I got to the correspondence side. I was like, this is Disneyland for loans,
right,
compared to what I was used to, because there was either, the bank is like, we have A, B, and C, that's it, or not even that, maybe like A or
right,
B.
right.
So here, I mean, all the options was mind blowing,
Right. And
So
so, yeah, so some examples for people like on a correspond like a cross country or a like I would say that even the big dog, the fintechs like a
Yeah,
Rocket, those are
Rocket.
correspondent,
Yeah,
and
exactly. Yep.
yeah, and they
Those
are
are
a
your
nice
correspondent
mix
models.
of the best of both worlds.